now I think people are realizing that, okay, blockchains are a better database, right? They are a decentralized database. Okay, why is that good? Well, they're more fault tolerant, fault resistant, they're permanent, they're immutable. And so that technology is really good. Well, what's it really good for? Well, one application, Bitcoin, the Bitcoin blockchain is a better form of gold, which is money. Gold is money, right? Everything else is just credit, as JP Morgan famously quipped. And money's an asset that exists in the absence of a liability. And gold has been that for 5,000 years, but Bitcoin is as scarce as gold. So it has the primary element you need to be a store of value, but it's better than gold in that it's more portable and more divisible. So you can divide each Bitcoin into 100 million Satoshis. And so I look at that.
Mark Yusko explores an unusual concept that has the potential to completely transform Bitcoin's position in the world economy: institutional capital. He draws attention to the rising interest from sovereign wealth funds, endowments, and pension funds, which represents a dramatic change in the way traditional financial institutions view Bitcoin. Yusko contends that if these organizations commit even a little portion of their holdings to Bitcoin, demand may surge and the dynamics of the market might be drastically changed. Additionally, he examines how this pattern fits with Bitcoin's developing reputation as digital gold, highlighting its potential as a hedge against inflation and unstable economies. Yusko believes that this institutional wave may serve as a turning point that accelerates the acceptance of Bitcoin on a worldwide scale. For institutions around the world, what originally appeared to be speculative optimism is now evolving into a strategic financial approach. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you, and enjoy the video.
Back to the beginning of this year, we had all the excitement about the adoption or approval of the Bitcoin ETFs, and Bitcoin prices were still down in the doldrums, and sub 40,000, and recovering nicely from the 15K at the trough after the FTX debacle. But still, not really that exciting. And people were still kind of nervous. Suddenly we get this big move right after the approval in January, February, got all the way to 74K. And it was like, oh my gosh, the halving, it's going to be great. And then we went the other way for a long time. From February through September, we kind of went like this. We kept making lower highs and lower lows, a very ugly, what's called a distributive pattern, where there was just a lot of selling going on, particularly in the futures market. And, in January, we do this thing every year called the 10 surprises. I, shamelessly stole it from Byron Wien, and we make 10 predictions about the future of different markets. And one of them is always around the crypto market. And we said that, highly likely we would see six-figure Bitcoin this year, and that fair value would trend upwards from where it was at 50K pre-halving to somewhere between 80 and 100K post-halving, depending on how many inscriptions and transaction fees we got. And long story short, we thought it would settle somewhere between, call it 120 and 150 by the end of the year, end of the cycle, but we didn't know exactly where. And one thing I was pretty sure of is that this would be the best Thanksgiving ever, which, other than me getting the worst karma joke ever, I got 24-hour stomach flu on Thanksgiving Day. Ooh. So everyone else is having a good time, eating the best meal of the year, and I'm laying in the hotel, trying not to be sick. Now, I made up for it the next 2 days. I had plenty of turkey, so it was fine. But it was, and I really thought, honestly, that we might get a big run. We might hit that 100K and we would run right to 120. It didn't happen. We got right to 99.8, I think, right before Thanksgiving. And then, the sellers just came in and punched it back down. And it took another week until we hit the 100K level. And then immediately the sellers were back. And look, there is a mighty sell wall at 100,000.
Yeah.
And it looked for a minute, when we went from 100 to 103, almost instantaneously, I thought, oh boy, there's a lot of shorts getting buried here. And they did. I think it was like $600 million worth of shorts had to cover. And but long story short, there's plenty of sellers out there. And I think what people still miss, and you and I talked about this last time, is yes, the ETFs got approved. And yes, there are people buying the ETFs and people that want to own Bitcoin through the ETF. But there are also a whole bunch of people, a whole bunch of sophisticated people who look at it and say, I can sell the future, okay, and buy the ETF, and I can capture the roll yield. So the futures price rolls down each month to the spot price, and that roll yield is capturable if you're short the future. And you don't have to be long anything against that short. You have to have a little collateral down. And so that business of that arbitrage puts a cap on upside in the short run. And so I think we're going to struggle a little more maybe than I thought to get kind of through this and into that next run where, and what I mean by that next run, meaning the accumulators are going to accumulate, right? We saw this morning again, MicroStrategy is out buying, $2.1 billion worth and $1.5 billion last Monday. And he's always out there, issuing equity and debt, buying more Bitcoin. And there are other companies like my little company that I'm a part of, MetaPlanet, that's doing the same thing in Japan. There's probably some people doing it in other parts of the world. Now you've got companies like Mara and Riot saying, oh, well, we want to do it. And, tomorrow, I guess, Microsoft's going to vote on whether they should. Now, they're not going to issue bonds to do it, but they just have a lot of cash on the balance sheet. I guess Amazon shareholder, I'm like, is that just Michael Saylor, writing a letter? And, but somebody wrote a letter to Amazon saying, you should buy some.
Mark Yusko passionately argues that Bitcoin is the next development of money, frequently referring to it as digital gold. He emphasizes how Bitcoin matches gold's scarcity and surpasses it in crucial areas like mobility, divisibility, and durability. Building on the metal's 5,000 years history as the ultimate store of value, Bitcoin is more easier to transfer between countries. Break into smaller pieces each Bitcoin splits into 100 million satoshis, and endure the test of time because it is a digital currency. Yusko contends that Bitcoin is a better option for international trade and contemporary transactions due to its decentralized and safe nature. He thinks that skepticism is gradually giving way to broad acceptance as people begin to realize Bitcoin's potential. According to Yusko, Bitcoin represents a revolutionary advancement for money in the digital era, not just a digital asset. Now let's get back into Mark Yusko's insights. Don't forget to like, subscribe, and enable notifications for more valuable content.
So, look, as that demand continues to build up, that ability of people to arb the roll yield is going to continue to diminish because, back in February, that roll yield was really big and it compresses. It's still positive, but with the cost of financing, it's not as great a trade as it once was. So that's a long-winded way of saying I'm happy we hit the magic, 6-digit level. I think we'll continue to accrete and go higher. I think a lot of it's going to come down to, do any of these big Mag 7 companies actually buy some? That'll be a big deal, particularly in the short run. Do any other corporations around the world model, the MicroStrategy, MetaPlanet kind of model and become Bitcoin banks, essentially? And then does the strategic Bitcoin reserve bill get passed in the first 100 days, Senator Lummis's bill, that, look, with David Marcus as the Bitcoin and AI czar, pro-crypto guy, with Scott Bessent, who's relatively pro-crypto, a Treasury secretary, with the guy from, the Commerce Secretary, Lutnick, with Commerce Secretary, he's relatively pro-Bitcoin. So we got a lot of support for the SBR. And 200,000 Bitcoin isn't all the Bitcoin in the world, but it's a meaningful number.
Yeah.
And, it's 10 weeks of MicroStrategy. So it's not like all the money in the world, but it's meaningful. And I think that could trigger some sovereign entity FOMO, because if the US does it, well then, geez, does Japan have to do it? And then does the ECB have to do it? And then does everybody have to put it on their central bank balance sheet? Which, if you would have said that 5 years ago, Tony, people would have looked at you like you had two heads. Yeah, so you're an idiot. There's no way that'll ever happen. Now I think people are realizing that, okay, this is a better blockchains are a better database, right? They are a decentralized database. Okay, why is that good? Well, they're more fault tolerant, fault resistant, they're permanent, they're immutable. And so that technology is really good. Well, what's it really good for? Well, one application, Bitcoin, the Bitcoin blockchain is a better form of gold, which is money. Gold is money, right? Everything else is just credit, as JP Morgan famously quipped. And money's an asset that exists in the absence of a liability. And gold has been that for 5,000 years, but Bitcoin is as scarce as gold. So it has the primary element you need to be a store of value, but it's better than gold in that it's more portable and more divisible. So you can divide each Bitcoin into 100 million Satoshis. And so I look at that and say, all right, now that the narrative has caught up to the technology and people you can't ignore it. And I said, 2022 to 2027, kind of that's the then they fight you phase. But, it won't take that long. We'll win. Well, the thing is, if you're here, right, if you're watching your show, if you own Bitcoin, if you believe, we've already won. That's the cool part. But they're not going to give up the fight. And even if we win a couple skirmishes here and even win a few battles, the war's not over. And JP Morgan is going to fight, and Deutsche Bank is going to fight, and the Bank of International Settlements is going to fight, and they're going to try saying, well, buy our CBDC instead. Don't use that Bitcoin. That's for terrorists and criminals. No, CBDCs are for terrorists and criminals, governments. So I don't think that then they fight you is over, but we're halfway through it, or 60% of the way through it. And 25, 26. I think we'll make progress, and I think we'll see new highs, and I think a lot more people will believe, right? They'll kind of say, oh, wait a second, this doesn't sound as crazy as I thought, right. And this technology actually seems pretty sound.
Mark Yusko ends by serving as an important reminder of both the ongoing fight for Bitcoin's acceptability and its transformative potential. He draws attention to the growing institutional and governmental interest in Bitcoin, citing initiatives such as Senator Cynthia Lummis's Strategic Bitcoin Reserve Bill. The U.S. government may store Bitcoin as part of its strategic reserves if this law is implemented, which might have repercussions for other countries. Yusko explains that because of Bitcoin's technological advantages and gaining legitimacy as digital gold, such operations that were before rejected as unachievable are now increasingly seen as viable. Yusko also highlights the special qualities of the Bitcoin blockchain, characterizing it as an excellent decentralized database that provides immutability, permanence, and fault tolerance. Compared to gold, which has been the ultimate store of value for humans for millennia, Bitcoin is a more sophisticated form of money because of these characteristics as well as its mobility, divisibility, and scarcity. Yusko notes that central banks and established financial institutions are still pushing alternatives like central bank digital currencies, despite the fact that the narrative surrounding Bitcoin is keeping up with its technological advancements. He does, however, maintain his optimism, arguing that the then they fight you stage, in which Bitcoin encounters strong opposition, is coming to a conclusion. According to Yusko, Bitcoin will become more widely accepted, skepticism will decrease, and it will reach new all-time highs, securing its place as a vital worldwide asset as 2025 and 2026 draw near. His final message is unambiguous. The battle for acceptance and recognition is far from done, but those who have already invested in Bitcoin have essentially won by seeing its worth early. And as always, happy investing.